In this video, I'm going to explain what breaker block is, how to identify a breaker block, and how to use breaker block for your trading. Breaker block is really a very good trading model, just like other block, fair value curve, supply and demand. Okay, so if you master breaker block, you can use it to become profitable when trading. So before I get right in, please do it to like, subscribe, turn on the bell icon. Breaker block is simply an order block that has feed. Okay, this right here is an order block. If you know how order block works, you know that when you want to identify an order block, let's say in a bullish scenario, what you need to do is to look for an impulsive movement that causes a break of structure. Then you go down, look for the uh, bullish candle, the bearish candle before that bullish um, movement. So you look for that particular candle and draw it out and wait for price to come back and retest it because the candle before the bullish movement is the order block. You draw it out and once price retest it, you enter another this order block. For a breaker block is an order block that has failed. So for example, in this scenario right here that you can see, this is actually a bullish movement as you can see, right? This is a bullish movement which causes a break of structure. You get so which normally since this is a bullish movement, the candle before the candle that causes bullish movement, you have to draw it out as an order block. So which normally should expect price to come back and retest it and go up. But instead price came, break the order block, meaning that the order block does not hold. You get price can break the order block and those what and come out to the side. So anytime price breaks your order block, you just know that how your order block has automatically turn toward a breaker block. So an order block is a breaker block is an order block that has feed. So once price penetrate through your order block, it means that it has turned to a breaker block. Into this to draw it out and wait for price to come back and retest it. You get and once price retest it will enter into it. So I'm going to open up the chart to show you guys how it works. You get but I want you guys to understand this. You get so simply there are two types of breaker block. We have the bullish breaker block and the bearish breaker block. So for the bearish breaker block, you need to be see something like an uptrend you get. So you can see that when, for example, price breaks structure to the upside, you get price breaks structure to the upside, you identify your order block, which you draw your order block at. You get so immediately price come back and break through this your order block, you get breaks through this your order block, know that this is not an order block, rather a breaker block. So what you should be doing is expecting what? You should be waiting for price to come back and retest this. So once price come back and retest this, you can enter your trader aggressive or go to lower time frame and wait for a break of change of cutter to the downside. Then you can take your trade to get this simply it is done. So this right here is a bearish breaker block because the price was going towards the upside, then there was a change of character, and the other block did not hold. So price came back, retested it, and changed direction to the downside. So this is what a bearish breaker block. For a bullish order block, so a bullish order block will look something like this. The price coming downward. Okay, so there's a big exposure to the downside, and right here will be your order block, right? This around this area will be order block because other block that causes big exposure to the downside. So you should expect what price to come back to your order block and test it, but once the price will come back, break your order block, you get so automatically change this order block to a breaker block. So you should wait for price to come back, we test this particular breaker block, and then you can take trade toward to the down to the upside. So this is an example of a bullish order block. So for trading, sorry, breaker block for trading breaker blocks, and for this scenario, your stop loss should be below your breaker block. Okay, should be below breaker block. So in this case, Let me draw this out so you can see. Okay, for your entry, your stop loss should be below the breakout block and your take profit should be just be at the top of the retracement you get. So this is what it should be. So right now we'll be going to the chart. Let me show you guys how to identify breakout block in the chart. And guys, if you're finding this video, if you please do to like, subscribe, and turn on the bell icon. So guys, this right here is an example of a breakout block. Let me show you guys. So right here we see this particular bearish candle, right? This bearish candle engulf this. So this should be an order block because this cause a break of structure, right? Cause a break of structure to the downside. So this should be an order block. So if you draw the order block out, and as you can see, instead of when price retraces back to this, instead of it try to support this particular region, what happen? Price pierce through and breaks above it, right? Price pierce through and above it. So what you do is simply wait for price to retraces back, which you can see at this particular place. Price retraces back, tested it, and before price went to the upside. So this guys, this how you can actually do this. You get. So this is the 1 hour chart. You get. So if you identify a breaker block in the higher time frame, you can go back to what a lower time frame and look for entry. And this is what I was seeing. You can see another block at this particular place which fade and price pierce through. All you need to do is simply wait for retracement. Price trace back to this particular place, you put your entry. You get simple. So guys, let me show you another example. Guys, this right here is another great example. And you can see this particular bearish candlestick, right? And you can cut this on other block at this particular place, which you can see the price this will pierce through the other block. Later on, price came back, retraces this particular place. The price came back to retrace, touch the other block at this particular place before going back up. So guys, other block, sorry, breaker block is actually a very good trading strategy. So when doing this, you should ensure that you look for a good order block. You get an order block that has fit, you get that has fit old price. You get. So what I want you to do is go through your chart and identify as much breaker block as you can in the chart. So if I made this video, I actually went through the chart. I look for example to show you guys. So you can go through identify order block and identify breaker block you get. So once you see a good breaker block, try to identify them, you understand? So guys, this will be it for this video. If you find it helpful, please do it to like, subscribe and turn on the bell icon. I'll see my next video. Peace out.